So I'm going to talk a little bit about the securitization of real estate, and I'm talking about it because I'm looking to build off my previous presentation about the Canadian banking system. One of the things that I credited the Canadian banking system for doing very well was being accommodating for financial innovation. So when you have new financial instruments, new types of assets that get introduced onto an exchange, the Canadian banking system did a good job of making sure that gets absorbed by the commercial banks and that they have some sort of way to deal with it, and it's a tractable problem. Instead of it going into like black markets and going into illegal arenas. Um, and in the United States, you have a little bit more of a block in passing of legislation. So, and that probably hinders the United States in terms of its stability because the legal framework isn't getting updated as often to really keep up with the times. Any successful banking system like that of Canada will be able to update that legal framework. Um, and so, what I'm going to do is talk about these new kinds of securities that are being proposed, and they're in fact some of them are probably already trading as we speak, but uh, at the moment they're not really regulated in the United States, and so there's definitely a larger risk factor involved in actually buying and trading any of those assets. So one of them is actually what we would call the tokenization of real estate, and it employs cryptocurrency to do so. And cryptocurrency is sort of it's got a lot of hype in it. You know, a lot of people saw Bitcoin and Ethereum and Ripple and all these different types of cryptocurrencies in the news, and people started dumping money into it. And there was a huge gold rush mentality and get rich quick kind of scheming, and that I think takes away from a more level-headed conversation that we can have about new forms of currency being introduced onto trading markets and FX exchanges and stuff like that. So, what cryptocurrency is a digital currency that employs encryption techniques to regulate the generation of new units of currency. So it's automated. There's no government printing money. This is an automated uh, this is an automated process that's putting out new currency, and it's controlled by these basically by what we call the blockchain technology, and that's the underlying tech that enables cryptocurrency to be a valid medium for exchange, because blockchain technology has this very intrinsic nature of being able to verify transactions. So, to run a quick conceptual overview, imagine you have a network with a collection of nodes. Now, each node is a member of this blockchain. This whole network is part of a blockchain. And so each node has its own individual record of all the other records stored on the blockchain. So if we're going to go in and amend a record in one single node, then that node is going to communicate with all the other nodes to inform the entire blockchain that a change is going to be made. And all the other nodes have to agree to that change in order for it to be updated. It has to be a valid transaction, a valid change. And this has very powerful, extremely powerful, I suppose, ramifications for currency and actually many other industries, which could potentially be disrupted or at least somehow altered with the introduction of the blockchain. So, specifically cryptocurrency, it operates without a central bank. So it's on the blockchain, its own blockchain, involved in operates without a bank. It's decentralized, anonymous, and as a result, it's sort of been lately used for illicit activities such as sports betting online, gambling, purchasing illegal things on the black market, drugs, and that has definitely perturbed some governments because it's just sort of tacitly encouraged these markets to continue. Um, and it's especially because of it can be so anonymous and it's difficult to trace because of the encryption of the blockchain. Um, so there's some problems in accountability, which definitely pose legislative issues for how to properly integrate this into a legal framework for the benefit of our society. But that's broadly what the state of cryptocurrency is as of now, and it can actually be used for legal things too. So I think that's really what I think needs to be focused on is not these black markets and stuff like that, but what is the benefit for other industries? So in real estate, for example, you have the ability to use cryptocurrency um, to securitize real estate and actually fractionalize a real estate asset, let's say like a multifamily building. You can fractionalize that ownership into many, many, many different types of ownership. I'm sorry, many, many, many different pieces or tokens of ownership so that those tokens can be traded and they're going to be liquid and fungible. Now, to explain kind of how that happens, let's first talk about a traditional real estate transaction. So in a traditional real estate transaction, you have a legal entity, could be an LLC, corporation, whatever, a person who makes an offer on a property that's on the market. And they may use real estate brokers. The seller accepts the offer, and then you have some intermediary steps to ensure the closing. You have an appraisal, inspection, financing must be secured. There are these types of contingencies that must be met to make the deal happen. Then a title company who is going to update the ownership title, and they are going to be involved in registering this transaction as being valid. They're going to ensure that the title to the piece of property is properly transferred and validly transferred from the seller now to the buyer. And then the trade closes and the new owner takes possession of the property. Although real estate has definitely been credited with being able to generate lots of wealth and people have gotten very rich off of real estate, people have also lost a lot of money on real estate. There's some problems that are definitely foreseeable in the nature of this transaction as it stands today. One of the disadvantages would be the fees that are involved. You have all these intermediaries. You're going to be paying a broker, title company, loan origination fee if you're securing financing. So you're paying all these fees, and those are upfront costs that you have to eat in order to become property owner. And then when you become the property owner, you're dealing with a very liquid asset, especially if it's like a larger commercial building, even if it's like a large multifamily building, 100 units, 250 units. If it's a commercial building or industrial building, they're even more. The degree of illiquidity is just way greater because it takes a specific buyer or an investor to purchase those properties. And so even if you own one of those properties and you wanted to put it on the market, you might have to, the time scale that you'd have to wait to get that property off your hands and to get some cash for it would be, it could be a few months if you're lucky, it could be years. So you're kind of locked in to your investment, and you're not able to buy out quickly. That's another disadvantage. Now, what tokenization of real estate, introducing cryptocurrency into the mix, what that has the potential to do is actually increase your ability to exchange your share in a property for cash quickly. So you can get USD very quickly. You just sell your share instantly, or relatively instantly, not a few months or years. We're talking minutes or hours. And you already have companies that are cropping up that are doing this. And of course, there are real estate securities already. You have REITs, you have mortgage-backed securities. Obviously, there's traditional ownership. Now you have startup companies that are creating these new assets that are called tokens. And what I've actually done in this presentation is I've done a little case study of this company called Bay Area Token. And Bay Area Token fractionalizes, they're looking to fractionalize ownership of real estate assets into these tradable tokens. And then the way they do that is that they have their own user platform. So it's like you go onto a website, let's say, and you put in your deposit of cryptocurrency. Let's say it's Bitcoin. You deposit your Bitcoin into an account, and that's going to be crowdfunded. That account is other people are going to add more their money, their Bitcoin, into this account, and eventually they're going to reach a capital goal. Let's say it's $1 million. They're going to reach that $1 million mark, and then they're going to go forward and purchase a property. Of course, on that website, there's going to be a portfolio that you can browse through, and so that's how an investor might say, I want to own a portion of this specific property. These cap rates look good. This looks like it would be a good investment. You're looking at some of the financials of the income generation of that asset, of the piece of real estate, and all this other information to make that decision to invest. And now an investor will, has the chance to actually do that without actually getting a real estate broker, without even really dealing with the nitty-gritty aspects of the transaction themselves. They can own a really small share. They don't have to even leverage themselves and use debt to finance purchase. They could, if they just have like a spare, let's say $30,000 lying around that they want to invest at least partially in real estate, they can do so. So then, and I will say that I think there is a market for this. I definitely, it's probably not going to be the average Joe. That is, the average Joe will probably buy something with less risky returns. Just more traditional stocks, bonds. But certainly you have mutual funds and retirement accounts, pension funds, professional portfolio investors, avid real estate investors that might have an eye for these kinds of opportunities. And certainly to reach $1 million capital goal, it probably is through crowdfunding is pretty reasonable. So this is definitely a possibility. And basically, what's going to go on is that I talked about the crowdfunding aspect and a capital goal being reached. And this is actually called a decentralized autonomous initial coin offering, DICO. And once the capital goal is reached, decentralized votes occurs. They decide to move forward with the property, and then Bay Area Token, the company, will purchase the property with the funds, and then it will take over ownership of it. And of course, the fractional ownership goes to all of the investors that put their money in at the beginning, and they're awarded a proportion of their initial deposit. So, let's say like I came in and I decided to put $100,000 for this $1 million property. Well, I would own 10% of that. And so then you have a token generating event where each individual investor is given their share of tokens. So if there's 1,000 tokens that cover 100% of the property and I own 10% of it, I'll get 100 tokens. So I have 100 tokens now. And each token is, is a fractional ownership of that property. And so now I have these tokens, and if I really want to, get rid of these tokens. I hold them for a couple years, get some quarterly dividends from them, and I decide I don't even really need to use these. I don't really want to have my money in this asset anymore. Maybe there are reasons, I just want to move my money elsewhere, or the dividends were not that good, the returns were not that good for my original investment. I want to reinvest. Now you don't have to go through getting all the whole long, lengthy process as we discussed, getting a real estate broker, paying all these fees. Um, it's a much quicker out for you. So you can pull your money into a token, put it on exchange your tokens with some other investor for cryptocurrency, for USD, fiat currency even. Um, and so that liquidity and that fungibility, that's the quality of there being such easy interchangeability between the tokens and cryptocurrency or fiat currency, that it just makes it a much nicer investment. Their money doesn't get locked away for so many years. You have the sanctity of mind to be able to pull it out. So that's definitely a huge plus. And I'd say it's something that is worth exploring. And I think it definitely has, its benefits to the real estate market in general too. Because from what I can see, what I imagine is that a lot of real estate gets purchased off of debt, and with better crowdfunding methods like through a DICO or through an initial coin offering and tokenization and fractionalization of real estate, by way of this process, we can definitely see that there's an increase in we can see that there's no longer as much of a need to actually purchase real estate with debt financing. You don't have to go to a bank and get out of a loan and take on all the risk on yourself. You take on a smaller share of that risk with a bunch of other people, and then when you create this this more liquid market where you can pull out your ownership stake and you trade it very quickly, so you start to get more of these high-speed transactions, and that will actually have a great effect on adjusting the price of real estate closer to the actual value of the underlying asset. And that is just a result of having those high-speed transactions, and that's totally underpinned by blockchain technology and by cryptocurrency. There's just faster processing times in getting your tokens exchanged for fiat currency or cryptocurrency. That transaction occurs way faster on the blockchain. It can happen in minutes or, again, hours, even if it's a very large sum of money, and you don't have as many parties skimming off fees and taking their little haircut here and there. You're talking about like real estate brokers, banks, mortgage origination companies. That stuff kind of goes away. Title companies they skim off a lot too. So in spite of this being, in some ways a promising business enterprise, and there being potent advantages, at least in my opinion, in my review of Bay Area Token and reading up a little bit about it here and there, it's something that's not going to just break onto the American market quickly, and it's because of regulations. And I'm not saying it's a bad thing, because certainly the fact that there is this anonymous aspect to Bitcoin and cryptocurrencies that make it hard to trace who the owners are, that decreases accountability and decreases transparency of these transactions. So it's a difficult problem to address from a regulatory standpoint, because you don't know who to hold accountable if something goes wrong. And so out of fear, I think that you see that a lot of these you see like these kind of companies like Bay Area Token, they're not going to register with the SEC. Um, in fact, in their business plan that I read through, they are applying for an exemption in Rule 504 of Regulation D, and basically they're they're applying to be exempt from registering with the SEC, but still allowed to trade and sell and offer financial securities. And the reason why they're able to qualify for this is because they are agreeing to offer and sell less than five or up to $5 million in any 12-month period. So that really puts a restriction on their potential growth, because in these initial coin offerings, they're not going to be able to even surpass $5 million. So that's not even that many properties. That could potentially just be one property. So the scalability of a business like this is just low. There's too many roadblocks from a regulatory standpoint, and it's my opinion that we have to retool the legal framework to address this problem and to allow these types of companies to prosper and grow at a reasonable rate and have the same level of accountability as those kinds of companies that are registered with the SEC. So we do want to demand stringent and accurate, valid, trustworthy financial reporting for companies like this and for other crypto-based companies. And it's totally a game changer if that kind of legislation is able to be integrated into our current legal framework, because it will enable the United States to be, at least in the U.S., if we're talking stringently the U.S., I'm talking about Bay Area currency. In the United States, it allows financial innovation to take off, and in some sense, we don't get left behind by other countries. You see that the market cap for cryptocurrency is currently valued at $500 billion. And so this is growing. So that market cap is growing every single year. It's going to, and it's going to continue. I don't think we'd be remiss to say that it's going to continue at a pretty strong rate of growth. And so, in my opinion, it would be pretty foolish for the United States to sweep this issue under the rug, and we need to look for a way to work with these intermediary companies, banks certainly, but also like title companies, other intermediaries, real estate brokers. I guess I'm a little biased because I am a real estate broker, but other kinds of companies, other types of financial intermediaries that play a role in any kinds of transactions, because this kind of technology will take off, and it's not going to happen overnight. It's going to take decades, but it's important to hold that that long view in sight, and to ensure that the language of our legal system and the types of regulations that are in place do keep up with this, I suppose, breakneck pace technological innovation. I think the countries that do this well will succeed in the next half century. And if in particular, like I don't have a whole lot of experience in. I suppose I didn't do a whole lot of research about this, but I imagine countries like China, who do allow these kind of crypto firms to really like prosper, and they don't impose many legislative restrictions on the growth of these companies, like that $5 million cap. If that's China definitely doesn't do that. They might have other restrictions in place, but I've heard of cases where you have crypto firms that are able to do initial coin offerings and basically fund 40, 50 million dollars in private investors and maybe even government, honestly. Um, so I think that if other countries are not imposing those same kinds of restrictions, then at the end of the day, you're going to have intellectual capital in the United States that would be interested in these kinds of emerging technologies that are just going to go to another country and they're going to develop it in another country in a completely different market, and that's going to leave the U.S. behind. It's actually going to leave people. It's going to encourage people to leave the United States. Um, uh, Now, of course, that this is all sort of speculatory, I will admit, but I could see in some capacity that there is, I suppose, just like from an intuitive sense of going through these kinds of patterns that are emerging in emerging technologies and regulation in the media, what stuff that you hear, there's a potential for the U.S. to be caught kind of blindsided. So ultimately, regulation. I speak about all of this, Bay Area token and securitization of real estate assets, to really drive home the point of how important regulation is, and how important it is to take the step forward and be proactive with regulations, to forecast what is going to be profitable, and create technological infrastructure that in some ways it borders on utopic. I'd admit, I think that's the scare, like this dystopian, utopian future. And I think that there might be certain political factions that enjoy the status quo. They enjoy the state of the banking industry right now, and so there's not as much incentive to allow potentially disruptive technologies from being introduced into uh, a realm of legality. So ultimately, I do hope that this issue becomes a little more widely talked and that we get out of the hype of Bitcoin being a gold rush, get rich quick. It's not that at all. And I think that those that have made their money off of Bitcoin at this point have made their money, and that's great for them. But I think now our society should pivot more towards a conversation about blockchain technology and pushing this conversation up to our legislators so that they can develop a strategy for how to deal with it in the future. So that is my presentation on the securitization of real estate assets and how that affects consideration for regulation. I hope you enjoyed. Send me an email again, or link, or put in a message in the comments if you have any questions, or if you're have anything to say about what I sort of talked about. Definitely a lot of the stuff I talked about in this video was speculatory and my opinion. And of course, my opinion is not as well informed as perhaps it could be. So I'm definitely interested in hearing alternative perspectives, alternative viewpoints.